Hey, it's Clay, and I'm going to talk about and show you how to make a free broker work best as a day trader. And I'll be using both WeBull and Robinhood as the primary examples. And the good news here is that this change is just a small little change within the tools that we're using. And by changing it, it's really going to transform and really reset the landscape that you're looking at things from a day trading perspective. I do want to note up front, if you are a beginner just getting started in the stock market and your mentality, your philosophy kind of approach, I'm just here to have fun. I'm actually being smart because I'm not paying for a plane ticket to fly out to Las Vegas. I can just use the stock market, use this phone app, as my personal casino. If that's your mentality, hey, that's fine. This video is not going to really be for you though. And like I said, I want to honor your time. If you are someone who is saying, no, I am a beginner, just getting started, want to become a day trader, but I actually want to treat this seriously. I want to build a strategy that's consistent. I want to basically create in my own little personal ATM machine. Now, not ATM machine, because nothing's going to be right all the time. But at the core, you want to build a viable strategy. You want to build something that over extended periods of time is consistent and gives you consistent profits. Well, then this video is going to be for you. Now, the reason why I'm choosing both WeBull and Robinhood, a couple different reasons. First off, you got to give credit where credit's due. Robinhood, super popular. I'm not a huge fan of Robinhood, but I'm also willing to just say, hey, well done from the marketing perspective. They've built themselves a great company. A lot of people use them. The other person I'm using, or the other company, I should say, the other app broker is WeBull. And I'm using them because this is who I would recommend. And as you'll see here, they have a fantastic platform, and they make making this change very straightforward, very easy to do. And I'm all for efficiency, and I think, in my opinion, at least, WeBull makes that much better. And like I said, just for other reasons too, Robinhood, I don't really like their platform. And one of the reasons why don't you like their platform? Because it's very change here, and at least at the time of this recording, I'm pretty sure they don't even offer the extent to what WeBull does. Even if they do, it's very clunky. But to be fair, also, that could always change. But as of now, this is why I would also be talking about WeBull, because I think they make this change a whole lot better. Now, the big thing with this change is you are going to need to make a sacrifice from your mental, perspective of what you're willing to accept, what you're willing to be okay with. And if you can do that, that's fantastic. Now, if you're not okay with it, then there is all an alternative. But the alternative is going to be, well, you're going to need to go to a broker that charges fees and commissions. There's just no other way around it. If you're not willing to make this sacrifice, which I'm going to talk about here in just a second, then there is a solution. That solution is you're just going to have to go to what is known as a direct access broker. And those brokers give you, direct access to the markets and will allow you to operate very quickly, but you are going to have to pay for it. So let's get to this sacrifice that you're going to need to make in order to make this little change here from, the broker perspective actually work if you want to stick with a free broker. Now, the change you're going to need to make is just slow it down. What is it? Well, it is your strategy, okay? Your day trading strategy, it needs to be slower. And I'll explain what I mean by slower here in a few moments. But just understand that free brokers are going to be slower. And I explain this more in the video that you see here on the screen. You can go and watch that. I'll put a link down in the comment section or in the description box below. Or if you're watching at claytoro.com, I'll just put it right down below the video. And that'll go more in depth about how free brokers are making money, and the process at which they make money. It does slow down the broker, and it slows it down enough where it's not like it's hours upon hours slower, but it slows it down enough where if you want to do certain types of day trading, it's just not going to work out because it's going to be too slow. But if you do want to stick with them, and free, who doesn't want free commissions? But if you do want the free commissions, then like I said, this is what the video is revolving around, how to make the change here. So the mental point that needs to be made is this: are you willing to slow down your strategy? Or more particular, are you willing to just have to wait a little bit while longer to see what happens with your strategy? Now, obviously, you want to see the results, meaning you make money within the strategy, but in order to see the outcome, to get those results, are you willing to wait a little bit longer? So let me just extend this to a very, kind of opposite end of the spectrum. Let's look at an investor. So an investor is going to buy at a certain price, right? And then they are going to wait. Well, as an investor, especially, I'll take myself for an example. In my retirement accounts, right? My retirement accounts, I am buying. And the time period, which I am waiting to see my results, 40 years, okay? So 40 years, long time. So at that point, the question really becomes, well, how much do you think I care about my original buy price? if I don't get in at the exact perfect penny entry, if I don't get in within 5 cents of what, does that really matter over 40 years? Of course not. 40 years later, I won't even remember what I bought. Now, yes, this is an extreme example, but this is what I mean is we're trying to reduce the impact of, to be more specifically, this part of the process right here, your buy or your entry point, right? We want to reduce that impact. We want to reduce the amount it matters to the overall strategy. And we can do that by slowing everything down. But the problem with free brokers is, I hear it all the time. It was too slow of an entry, which makes sense. If you are operating under certain circumstances, then yeah, that entry point is going to have a huge, huge impact on your overall outcome. So then, the next chain of logic would be, okay, well, how can we reduce the impact that it has? So that's the premise going in, is you have to be okay with slowing things down a bit. Now, if you're sitting there and saying, no, I want profits, I want to know what's going to happen within 30 seconds, within a minute, that's okay. That's somebody like me, right? I want to get in, I want to get out. And sometimes if I can get in and out within 20 seconds, 30 seconds, fantastic, perfect. Within a minute, perfect. And if you want to operate under that set of circumstances, well then yeah, your entry point is gonna be very, very important. And you can do that, but you just need to accept the fact that, well, you're going to have to go and pay for a broker. You're going to need to locate a direct access broker, and you're just going to have to pay fees and commissions. There's no other way around it. But right now, we want to slow things down. And the reason we want to slow things down is we want to lessen the impact that your entry point has on your overall outcome. So on the screen here, you see WeBull, and I'm going to use their platform just because, well, I like their platform and it does a good job of why I would recommend using them to make this change. Because, like I said, it's a fantastic platform, and technical charts, as far as I'm concerned, are extremely, extremely nice, at least to my eye. Now, what you want to set up here, and let me take a step back, getting a little ahead of myself here, but I'm assuming that because, again, remember the premise here, you are serious. You want to treat this as, you want to actually build something that's consistent. So you need to make, good decisions, right? In order to make a good process, you need to be making good decisions. And a big part of that from a data trading standpoint is technical charts. So you're going to be wanting to use technical charts. And this is what most people do. And it's not wrong at all. When you're a beginner, when you're just getting started, it is 100% logical to operate in this manner. So I'm not saying that anybody's stupid for doing this. I'm not saying that anybody is just, why would you do that? No, it's totally logical. But welcome to the challenging world of the market, where when you're new and you don't know what you don't know, what seems to be logical, and to be fair, what is logical doesn't actually make sense when it comes to being able to implement certain things, into the market. So what a lot of people do is they say, well, you know what? I need a chart. So they're going to pull up a chart here, and let me, I want to make sure that it's not, there we go. So let's make this chart nice and big here. And they're going to say, well, I need a chart, and I'm a day trader. So I need to be able to think quickly. So far, everything is true. So they're going to come down there, and that's what they're going to select. If you look very closely, that is the 1 minute time frame. So 1 minute, just a quick, if you're very unfamiliar, what does that mean as far as technical charts are concerned? Well, that means that each one of these candlesticks right here represents 1 minute worth of time. So right there, that was only 1 minute. Right there, only 1 minute. So it's boom, 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 boom. Things are moving very, very quickly. And as a day trader, when you're on the 1 minute time frame, that means all decisions are being formed and being, that's kind of the first domino to fall over. And when that first domino is on the 1 minute time frame, that is going to be, that puts your entry point at such a crucial level. If you want in at what such and such price, if you want in at $25 and you get in at $25.10 or 15 cents. Now, again, going back to my example, over 40 years from an investing standpoint, does that matter? No. 10 cents, 15 cents does not matter. If you're looking at things from a 1 minute perspective, yeah, that can make a huge difference within a strategy. But again, when you're a little slow, you're not going to be able to get it. You can. That's known as slippage, where your trade plan, your idea could say, I need to get in at 25. But because free brokers are a little more on the slower side, you may end up getting at 25.05, 25.10. And now all of a sudden, oh great, my trade plan has pretty much gone awry because now I didn't even get in at the price that I should have gotten in for my trade plan to actually work, for my strategy to actually work. So again, how can we reduce the impact of the importance? Well, like I said at the beginning, very, very straightforward. What I want you to do, what you need to do is you need to make the lowest time frame you're looking at right here. So on WeBull, I want you to click on the 5M. What does a 5M mean? The 5-minute time frame. Meaning, instead of each one of these candlesticks here representing just 1 minute, each one now represents 5 minutes. 5 minutes just slows things down. And yes, I get it. If you're doing this, you're competitive by nature and you want the best entry point possible. But you know what? If you're using 5-minute time frame as your, entry points still do matter. So it's not like you can go out there and just throw stuff to the wind. But now when you're 5 minutes, your baseline, all right, you wanted in at 25, you got in at 25.05 or 25. All right, that's not going to make or break you when you have the 5-minute time frame as your baseline, as the lowest you're willing to go, because that's just making, that's just opening more flexibility up to an overall trade and an overall strategy. Again, the downside is you'll have to wait a little bit while longer. You'll have to sit there and you'll have to let things develop. You'll have to wait for things to play out a bit more. So that's the trade-off, right? The entry point is affected much less, but the other is, well, now you got to wait a little bit while longer. Again, though, no, I don't want to wait, Clay. Totally fine. You have to pay. You have to use a commission broker in order to operate at the speed at which you need to. And I'm not saying you can't go out there and make money using the 1 minute or 2 minute time frame on Robinhood or WeBull. All I'm saying is that consistently over time, because it's not quite as fast as a direct access, it's going to be a constant battle. It's going to be a constant grind. It's going to be the situation is leveraged against you because you're not able to operate as quick as other day traders out there. And when it's not an even playing field, that's where things get very, very sketchy. But when you go up to the 5-minute, entry points matter. They just don't matter as much as long as you go into it understanding that you're just going to have to wait a little bit while longer. You'll have to have a little bit more patience to let setups develop. After you get in, let the trade play out. But when you use that, you can still stick with a free broker and it will be okay. So that is how you can make it easier. Small little change, but just make sure the chart you're using is a 5-minute. Now, if you want to add in other charts, that's fine. All I'm saying is, so let's make this a little bit smaller here. But if you want to make, your chart smaller or not, not smaller in the sense of the physical, but smaller in the sense of the time frame, you're not allowed. Do not go below 5 minutes, but you can make them bigger, again, from a time frame perspective of, so let's say now you want to do one, and I should know, this is just, totally, that's the one thing, it's very customizable, but I'm not saying this is how you should set things up. But let's say, all right, well, I want to have another time frame in here, but this time, I want to go up to, now the next time frame I would want to pay attention is a 15-minute. Well, there you go. So now you can analyze the same exact ticker, in this situation, SPY, because multiple time frame analysis matters. That's very important. But the lowest time frame you should be analyzing, my core point, is the 5-minute. But if you want to make it the lowest 15-minute, then guess what? Now your entry point is minimized that much more. Because now you have 15 minutes. Of course, now you're going to wait that much longer than even compared to the 5-minute. You could say, I want the lowest to be 30 minutes. Your entry point is impacted. It doesn't matter even, it matters even less, but you're going to be waiting that much longer. So, that's just personal risk tolerance, personal feel, how we're all different. People have different amounts of patience. People have different time schedules. So if you're somebody that's working a full-time job and you don't have the time to literally be checking every couple of minutes, then you know what? The lowest time frame you should really be looking at is probably the 15-minute, maybe even the 30-minute. I don't know. Everybody's, work schedule is different. Everybody's requirements at work are different. But I don't care, even if you are able to sit right in front of your computer, and watch second by second by second by second. If that's the case and you want to use a free broker like Robinhood or WeBull, 5-minute time frame. The minimum you should be watching is the 5-minute because it just lessens the impact of the entry point to your strategy and the results. And you just got to wait for a little bit longer. So hopefully that helps. Hopefully that can open your eyes and allow you to keep on using these brokers. But like I said, if you're like, no, I want to operate now. okay, well, it's time to get a new broker. It's time to actually have to start to pay for commissions and pay for fees and all of that. And that's just the way it works. And, I'm not saying one way is right or wrong. I'm just trying to help you beginners out here and just realize that you're not going to be able to trade in a boom, 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 boom on the 1 minute time frame if you're using a free broker, because you're just going to have too much slippage and your entry points aren't going to be what they need to be. Now, to be very clear here, I am not recommending WeBull because of their affiliate program. Robinhood also offers an affiliate program, but if you click on the link down below, WeBull, you will get a free stock and some other perks. I also get something too, so just like I said, full transparency, that is an affiliate link. But like I said, Robinhood offers the same exact thing, but if you're familiar with my channel, I do not recommend Robinhood. Just one of the reasons discussed in this video, but there's other things I just don't like about them. So this is not recommending one thing over the other because, well, one has an affiliate program and the other one does not. No, they both have affiliate programs, but like I said, I am not doing Robinhood just because of a variety of other reasons. But yeah, WeBull is who I would recommend. Like I said, if you click the link down below, then you'll get a free stock or whatever current promotion they're running. They're always changing. But the one thing to just point out real quick is you need to deposit $100. Now that $100, it's not a cost. It's something that you can use to trade stocks with. So again, that's not a cost. You can take that $100, but that just is what's going to give you the free stock or whatever the perk is, and then give you full, maximization in terms of the platform and get you started. But again, you can totally use that to trade stocks with. So hopefully you enjoyed the video. If you did, a couple quick things on my end. First off, a very time-efficient way to communicate. Hey, Clay, I like these videos. Please keep making them. Is to hit that like button. Comments, questions, suggestions, leave those down below. If you've ever watched any of my past videos, you do know that I read comments and will reply to them. And then finally, check out the channel as a whole. Lots of other content on there, lots of other different types of videos. So hopefully you like enough, what you see to hit that subscribe button, as I'd love to have you as a subscriber to the channel. But yeah, get out there, use that 5-minute time frame and lessen the impact that those entry points mean in terms of your overall strategy. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.